Hello everyone, brothers and sisters. Welcome back to the channel. Today is Sunday, January 25th, 2026. As usual, we will sit down together, analyze in detail, and build a trading plan for gold for the upcoming week, which is expected to be extremely volatile. Last week, gold experienced an impressive breakout, approaching and repeatedly testing the all-time high area around $5,000 per ounce. Buying pressure was extremely strong, but the question is whether this bullish momentum can be sustained. Or is a deep correction about to happen? All of that will be covered in today's video. First, let's look at the big picture on higher time frames, such as the weekly and daily charts. There is no doubt that the main trend of gold remains a very strong uptrend. The structure of higher highs and higher lows is still intact. Smart money continues to stay in the market, as reflected by consistently high trading volume. However, there is one important point we need to pay close attention to. On the daily chart, price has moved quite far away from key moving averages such as the M8O. At the same time, the RSI indicator has entered a mildly overbought zone, hovering around 70 to 75. This does not mean the price will reverse immediately, but it is a warning signal that the risk of short-term correction or strong volatility to sweep liquidity is very high. Conclusion: for the larger context, the uptrend remains dominant. Any counter-trend selling strategy next week carries significant risk. However, chasing buys at current price levels is also not a good idea. Next week, the market is likely to enter a consolidation phase with strong fluctuations before determining the next direction. So, what are the key price levels we need to monitor for the week from January 26th to January 31st? On the support side, we have the following levels. The first is the 4,960 to 4,950 zone. This is the nearest support area, playing a role in maintaining short-term bullish momentum. If price holds above this level, buyers remain in control. The second support, and also a strong one, is the 4,920-4,900 area. This is considered the technical bottom of the week. Whether price breaks this zone or not will determine if a deeper correction occurs. Deeper still, we have the 4,860-4,840 zone, which corresponds to the MA20 on the daily time frame. This is the boundary of the trend. If price drops to this area and bounces, it will be an excellent buying opportunity. Finally, we have the support zone at 4,780-4,750. If this level is broken, the bullish structure could be seriously threatened. On the upside, the resistance levels to watch are as follows. The 5,000-5,020 zone. This is not only a technical resistance, but also a very strong psychological barrier. Price reaction in this area will determine the direction of the entire week. If price successfully breaks above 5,020, the next target will be the 5,080-5,120 zone. Further up, if the market enters an extreme FOMO state, price could reach the 5,180-5,250 area. Based on these key price levels, we can outline three main scenarios for next week. The first scenario, also the preferred one with approximately 45% probability, is consolidation followed by continuation to the upside. In this scenario, during the early days of the week, price will move sideways within the 4,950-5,020 range. Then, in the middle or toward the end of the week, price will break strongly above 5,020 with a convincing daily candle close. The target will be 5,100 and further toward 5,200. For this scenario, the safest and most effective strategy is to wait for pullbacks to buy at support zones. Specifically, we can look for buying opportunities around the 4,960-4,970 area. A safe stop loss should be placed below the strong support zone, around 4,900. Take profit targets are 5,020, 5,100, and finally 5,180. This is the most favorable scenario for buyers. The second scenario, with approximately 30% probability, is a wide-range sideways market. In this case, price will be trapped between strong support at 4,900 and psychological resistance at 5,020. The market will continuously sweep stop losses on both sides to eliminate impatient traders. The suitable strategy for this scenario is short-term range trading. We can look to buy around 4,900 to 4,930 and sell near 5,000 minus 5,020. However, please note that this strategy requires experience, quick reaction, and should only be executed with small position sizes. Absolutely do not hold positions overnight if you are using high leverage. This scenario is not suitable for beginner traders. The third scenario, which buyers hope will not happen, with approximately 25% probability, is a deeper technical correction. The condition for this scenario to be activated is a decisive daily candle close below the 4,900 level. At that point, price may drop quickly toward the daily MA20 support at 4,860 to 4,840, and possibly retest the 4,780 level. In this situation, our strategy is not to panic sell, but to patiently wait for better buying opportunities. The potential buying zone will be around 4,840 minus 4,860. This is still considered a healthy correction within a major uptrend, not a signal of a trend reversal. So, to summarize the strategy for next week. For conservative traders, patiently wait for buying opportunities when price pulls back above the 4,900 zone. For medium-term traders, consider buying at deeper support levels, from 4,900 down to 4,840. For scalpers, take advantage of the 4,900 minus 5,020 range for short-term trades. For long-term investors, the strategy remains holding long positions, but absolutely do not go all in or chase prices at the top. Finally, there are a few important warnings. Next week is the last week of the month, which often brings noisy volatility due to portfolio rebalancing by funds. Price is currently at an all-time high, meaning there is no clear technical resistance above, making price action highly unpredictable. Therefore, strict risk management, position scaling, and always using stop losses are critical survival rules. Absolutely do not FOMO buy near the 5,000 level. The above analysis reflects personal opinions only and is not investment advice. You should gather information from multiple sources before making any decisions. Remember, no one will be responsible for your trading decisions except yourself. I hope this analysis and these scenarios help you build a clearer and more effective trading plan for the coming week. If you find this video useful, don't forget to like, share, and subscribe to the channel so you don't miss important updates. Wishing everyone a successful and profitable trading week ahead. Goodbye and see you next time.